Recording is on.
Welcome to DXD Monetary Policy Committee January Monthly. It's January 26th at 1600 UTC. I will share my screen to kick things off here. So this is kind of, I guess the agenda that I put over a little bit just to talk about things. I mean, just to start things off, this is the first meeting of its kind that is meant to kind of separate some of the governance aspects, I think, of DXDAO, which are focused, to separate things more that are just focused on like the DXD element, right? And so I think with the DXD element there's lots of key things where it comes from either the treasury makeup or what now is, I think, a big priority of a lot of DXD holders is the new DXD token model, how that's been implemented, and most recently kind of some of the redemption things. So what we're going to talk about here every month is kind of different things going on with the DXD market and different tools that we can kind of use to be able to like affect that in different ways. So to kick things off, everyone see this here. I'm going to do this smaller. How do I do this? Yeah, what about this? If I switch and do full screen here. No, that didn't even do it. Well, that's as far as we can go. Anyway, so this, the DXD token model recap. So brief refresher, of course, DXD originally launched with DXDAO in May 2019 through a bonding curve. May 2020 through a bonding curve. Lots of things in between, but we just had a new token model approved at the beginning of December. And so this was after several months discussion, kind of building things up. And there's really four key elements to that. Just going over them here. What's called a DXD price, and this is all just taken from the proposal itself, the proposal text. So what we have is the DXD price floor guarantee. DXD commits to buying any amount of DXD on the open market. Inverse bonds, these are kind of a little bit more long-term way. This is where you could basically increase the amount of NAV that you would get from the treasury by locking it up longer. New DXD minted, allow DXD minted in exchange for assets at full NAV, and then protocol-owned liquidity for DXD. And so we're going to go over a couple of these things here. I think if you just look at these, like, I think we have there in terms of what has been implemented in the month and a half since this proposal has, a little less than a month and a half. Here, I think we can see clearly that DXD price floor guarantee has gone through some implementation. We'll get to in a second. And then the protocol-owned liquidity for DXD is also live, that the DXDAO has begun providing its own assets, its own ETH in DXD to provide liquidity on Swapper. These middle two have not been implemented. Those were we're talking about those. This would kind of maybe not something that is that applicable right now as we kind of look to establish these other things. So so I think the starting first with the price floor guarantee. And so previous to the passage of the proposal, really the big DXDAO has been doing buybacks for a long time, right? I think it started originally in May 2021. So we had almost 20 months of doing those buybacks there. All of those were taken through various, Gnosis protocols, but they were basically done through two methods. Originally, it was Mesa, which was using Gnosis protocol V1. And then more recently, we would switch to CowSwap, which is happening both on Gnosis chain and mainnet. Now, that was prior to the DXD token model approval. And I think the key thing in the DXD token model approval was this price floor guarantee, right? That DXD commits to buying 70% on the open market. So the question is, like, how could DXDAO basically fulfill that commitment, given its previous, given the tools that it was using there? So there have been discussions about this redemptor contract and other ways, but right now you can see, I guess, is the biggest way in living up to this DXD token model recap is how the member balancer I kind of like member redemption balancer or something in there, but we can see how that's kind of affected here. And so these are some of the redemptor stats here. Yeah, actually, just first, so we had the buybacks were kind of still ongoing, and you can see here there were some over the last couple weeks, but these were in the $5,000 range. There were a lot of other orders that went out over this time, but because ETH moved so much, the dollar amount wasn't sufficient to be able to fill an order. So we had a lot of the CAL supporters have not filled. There is, I think David's gonna pass tomorrow. There's an ETH order that is for 400, I guess 400 WETH that will go through CalSwap, and it's a slightly different type of order, but that will be another one that will go in kind of this buyback portion. But really, the vast majority of the action since the proposal has been in the member redemption balancer here. And so there's actually only been one completed redemption balancer. So this was the first one for Connor for 5,634 DXD. But there are several, I think there are another 7 that are in the proposal queue right now. Several of them that are going to pass in the next day or two here. So I did just kind of want to look at what that would look like in terms of the stats here. And so let me put this page up here. And yes, you can see this is the Connor one. This is from Molotov, and another 2 of these are Connor's also, and then a couple different ones there. And you can see here, this is the amount that they're actually requesting in the proposals. And the total amount that would be taken, I guess, redeemed from the treasury with these proposals would go through would be about $5.6 million. And that's for 8,616 DXD. So I think kind of the opposite way, maybe an underrated thing about, there we go. Right, so that's for, that would be at 647 DXD. And yeah, and I think DXD is probably trying to about that right now. 452. Oh yeah. There we go. Oh, that was a period. There we go. So 6 million, right? That would make more sense. 699. Yeah, and so I think this is a pretty big, I don't know, contraction, and I use that word without much judgment. But here, you think the DXD circulating supply is decreasing by 8,600 before these proposals went through. That was right at 35,000. So that's like a 25% decrease in circulating supply. So although this seems like a lot that has left the treasury, if we just kind of see what was the trade, I think it should be this just time 0.3. Is that right? Yeah, I think so. So basically, you see whenever any of these redemption proposals go through, or any of the buybacks, what is basically happening is a DXD holder is giving DXDAO, is selling DXDAO their DXD in return for 70% of the treasury assets. And what that means for existing DXD holders is that 30% premium is basically getting distributed to the rest of DXD holders. So in this case, I think it should be at 1.8 million that is distributed amongst the rest of the 26,453 DXD out there. So we could do that math there. And yeah, so basically every DXD has earned, or would earn, assuming these proposals go through, an additional $68 on the DXD just from these kind of redemption balancers there. So that's, I think, kind of where we are for redemptor balancers. I don't know if there were any questions or comments on that. So this is 6 million. I'll fix that. Cool. And then, yeah, I think the second one, which we'll get to in a bit, this is the inverse bonds. So these are kind of new idea in terms of how to kind of incentivize long-term alignment between DXD holders and DXDAO, and also kind of give additional access to the treasury for that. And so there's this was kind of what was in the original proposal there. And this does require a lot of development and also a lot of kind of thinking about how these would actually work in terms of application. So we'll get to those in a second. And then the third element is the new DXD minting. So the current DXD contract will be up. And there's kind of two elements to this: the buyback reserve that is
on.
The DXD.
Yeah.
Mute. Oh, it's okay. Yeah, so this again has not, there's no kind of active development on this right now. I don't think it's as big a deal considering DXD is trading closer to 70% of NAV, but I think it's an interesting idea of, if DXDAO in the future wants to be able to fundraise, like how does that kind of happen? And I think it also shows you that if DXDAO wanted to be able to fundraise in the future, it would really only be able to fundraise right at 100% of NAV. So if we're at 70% right now, that's a long ways away of being able to take in new capital. So I think there would be a lot of work to be able to get DXD up to that point where it would be investors would be interested in putting more capital into DXDAO. And then the fourth element, the DXD, is the protocol owned liquidity. And so we have, this is what was committed to in the proposal. I think we've seen about half of this, maybe a little bit less than half of this has already gone through, which has helped improve some of the liquidity on chain there. Let me just get out what that looks like here. Yeah, so we can see here, right? I mean, Swapper mainnet is mostly DXDAO here, but it is already LPing on the ETH and DAI, and then it is now LPing on the DXD ETH1 about $200,000, and that has done a good amount to increase volume a bit, but is not really. That's not enough. I guess it kind of provides like a base for people to instantly sell into. And then, yeah, I guess the other kind of update wanting to give in general is DXD volume and liquidity. Let me clean this up a little bit. So just looking at how DXD volume has fared over the last couple months, I think the big thing that you would see differently versus the last couple months and the last year is the rise of this on-chain extra element. And that on-chain extra element is a lot to do with 1-inch limit orders. So if you look on this day here, I think it's the December 19th, there were basically two big $500,000 purchases of DXD that happened through 1-inch. I believe that was actually Molotov, who later did a member redemption balancer, but you've seen a lot more activity on the 1-inch there, and you can kind of see that percentage here. We were looking at 20-25% over the previous months, but over the last month or two, the on-chain extra number has gone up a lot. And you can see here also the swapper number on mainnet kind of maintains a good space there. I guess the average, and then I don't actually have the average one on here, but I do have that. Yeah, so if we look at, just take a picture of this real quick. Screenshot. Then, yeah. Yeah, and so this is, I guess, we're looking at the daily average for DXD volume. So 6 months, we're looking at around 30,000. 3 month average is around 41,000. But we've had a little bit smaller in the last couple weeks. As I said, most of that is because there was a very big purchase on the on-chain extra here for about 500K that pushed will push up the 3-month average for a long time. But is no longer is the reason that we have a little bit lower average here. This is not as important as it used to be because we were using this in order to like track buybacks over time, but it's still like I think an important metric to think about, like how much daily volume, organic volume is being generated by DXD. So this does not include DXD DXDAO purchases of DXD, but you can imagine that a lot of the volume is affected by that. If you look at Swapper, just this morning or maybe yesterday, right, you see the DXD ETH pool here has had a good amount of volume the last day, right? 29,405, which is definitely above. It's above the daily volume average already, and this is just for Swapper here. But you can see like some of this activity. Let's look at this one. Here is a purchase of $10,000 worth of DXD, and you can see kind of who's it going to, and so it's someone that, believe again, this is Molotov's address, but someone that had done a DXD redemption balancer and then now is more inclined to purchase DXD when it drops below a certain amount. We've also seen this with Connor as well. So you can see how like the market, the daily market, the volume, some of the activity there ends up being influenced by other policy tools, in this case, the redemption balancer ones, which is not a direct action from DXDAO, but still has some effect on the market. So that's it on the, and I guess, on the kind of stats part before we'll get into here and there, the other two elements of the token proposal that were important, I think, is the first one is the creation of this call and this monthly meeting where we talk about these things. I don't think we've had a good forum for this, so I'm hoping that this is something that we can build on in a lot of different ways and discuss different things. The other element that it committed to is commits to DXDAO's, I guess, core mission, of course, is building and funding decentralized products that enable community freedom. So in this new token model upgrade, there is also a commitment from DXDAO to spend at least 6% of DXDAO's treasury to fund product and operations for a year. And this is just kind of like a goal number. I think the key, the reason that I think it's important to have a number and the reason we put this in the proposal is really twofold. One, for DXD holders, I think it's a clear signal on what amount of the treasury will be spent over the next 6 months or a year, but probably 6 months because that's when budgets are decided. And so that's an important calculation in terms of valuing DXD, especially when so much of that value depends on the treasury spend. And then second, I think it's important for product teams to be able to get some, or not just product, but product and operations of DXDAO, is to be able to have some feedback loop in terms of performance and expectations of growth going forward. So, the interesting thing, I guess, to this, right, is if a bunch of DXD holders are looking to exit, that is a signal that they think that they can, 70% of the treasury right now is a good deal for them and they can get a higher return elsewhere. So that's a signal that I think is important for DXDAO to hear and understand. And what that would end up happening with this 6% of commitment of product development funding is it would basically decrease the amount that DXDAO would have to spend on operations and product funding. And so that also will depend, obviously, on like the broader crypto market. So, in a bull market, having the 6% number, if the treasury kind of went up there, that would give some flexibility to be able to spend further. But I think, this is kind of an important element of the model that I think gets to the core mission of DXDAO is to be able to build and fund decentralized products to do these things, and just having a clear agreement or understanding with DXD holders, I think, is important. So I've talked for a bit about this. Ross, I don't know if you want to take over here, or I could wait till the one.
Happy to.
Let me get off of it, or I was going to stay on the screen.
You want to go up one?
There we go. Get out of my full screen.
Cool. Yeah, I'm sick, so sorry if I'll try not to cough into the mic, and if I sound particularly raspy, this is why. Um, but anyway, so I have been looking sort of more closely at the policy as well as sort of the bonds, inverse bonds. Uh, and so the first thing is to ask, what are we optimizing for in this entire policy? Um, and in the short term, there is a mechanism in which token holders who want to exit can do so, and we provide clarity for what's going to happen in the future, what's planned. I think we're achieving those goals, especially with the member balancers, to provide the mechanism for token holders who want to exit to do so. But then in the long term, we want to better align all DXD stakeholders to use this monetary policy as a signal to inform decision making, to improve the DAO via this monetary policy, better allocation of resources, product funding, development, small grants, yeah, and just generally align incentives. That is sort of the broad goal of a good token model and a good monetary policy. Yeah. So, and sort of on that, we have a broad set of design goals that we want. Better tools to express preferences, ability to enter, ability to exit, ability to give signal. Clearly a clear relationship between the DXD token and the treasury, and that's 70% really starts to do that. Again, long-term alignment. We want people to be participating who are not just looking to get out slightly ahead, but to make this organization better a few years down the road. Getting DXD holders to participate more actively. And then, of course, easy to understand. If it's incredibly hard to use and know what's going on, people won't participate. And we would like everything to be as trust minimized as possible. So like the member redemptor balancers are kind of great for now as this short-term solution, but they're trustless for the DAO for the most part, but they're not trustless for the people who are sending their funds to the treasury. So that's trust minimized on one side, but it's not trust minimized necessarily on the other. So in these design goals, we want to sort of make that equivalent, right? Can you go to the next one, Chris? Okay, and then of course there are important incentives here. So we want DXD holders to be able to exit positions, right? If we DXD holders who feel trapped are not going to be good members of the community. And the other part of this is this NAV below 100% is very important to provide value to those who remain. That 30% going back to the people who don't redeem is a big value add for the people who want to stay. And then I think one of the things that hasn't really been discussed so much about the inverse bonds is that if the DAO does produce inverse bonds that give away greater than 70%, that action should be clearly beneficial to the DAO and DXD holders to offset the decrease in funds that are being returned to the treasury. And that's an important thing to sort of think about and optimize. And then any new, we talked about new DXD minting above NAV or at NAV. It's very important that that is at 100% of NAV, because anything below that is going to dilute existing DXD holders. And then on that note, this gap between the 70% that we currently have and that 100% is this sort of chasm that makes it, pretty difficult for the DAO to raise new funds. Getting, one would expect, as we've been so far below NAV, that it's going to take a lot of work. It's going to take work to get just to 70. We hope that that'll happen in the near future with the member balancers and other stuff. But getting up to 100% is going to take a lot of work. Yeah.
And not just like work on the monetary policy part. I think it's work about conveying, value elsewhere, that like DXD products, DXD revenue, venture grants, whatever, like that there is, some value there.
Well, and then the other side is DXDAO doesn't necessarily need to raise money right now. So it's potentially like that's a decision that the DAO is making. Does it need more money? If the answer is no, then having that number, that redemption number, be lower is beneficial to DXD holders, and putting it up to 100%, benefits people in a different way. It doesn't necessarily benefit the long-term DXD holder in the same way. So I did a sort of quick analysis of what was in the prior proposal for bonds that were discussed. And you can see here the chart shows the different rate that it would get paid out. Basically, I guess that's the yield curve. And one of the things is that you can see that it pays out more for short-term bonds. So the rate is 43% on the 6-month bond, 24% on the 12-month bond, and 21% on the 24-month bond, which in my mind is sort of reverse from what we would want in aligning long-term incentives. And
this assumes that the NAV would be taken at the deposit as opposed to at the end, which is a big change in that. But yeah, I think it kind of shows there's not a clear benefit to these, or clear benefit to these to the DAO in their current form, unless you're looking at the NAV at the end.
Good. Yeah. So one of the things I want to ask is sort of what do these inverse bonds achieve, right? So the first point is that with the current 70% price floor guarantee, inverse bonds don't actually make it easier to exit a DXD position. So they're not really helping with that. One thing that they do is they're rewarding DXD holders for locking up their DXD for a period of time. But the question that needs to be asked is like, what actually is the value of locking that DXD? Really, if you think about it, there isn't much, right? The spot price will go up temporarily while those bonds are being issued as people come in to buy in order to get out at that higher rate. But once the bonds are complete, that will drop back down to the 70%. And then the final piece here is that they do give a signal about sort of an expected future state of the treasury and its growth. But this is adversarial in a way because it's the longer term DXD holders don't necessarily benefit from giving away more of the treasury to get that information. And then so there's an example on the next one. So you can see here if Alice has 100 DXD and she can get out now at 70%, she's going to get $70. Let's just say $70. $30 of that goes back and is distributed to all DXD holders. But if you have a bond in place and let's say it pays out 80% of NAV after a year, if you sort of assume current prices hold, that means that they'll get 80, the treasury will get 20, and so token holders get less. And this is essentially EV positive for Alice, unless it shrinks by 13%. But even if it shrinks by 13%, Alice gets out at 70, and the treasury only gets $17.40. Whereas if you just said no, you get out at 70%, the treasury would have $26 would still be left from the 30% that came in. So it doesn't add any value for the DXD holder unless there is a clear benefit to that added time that it's being held, that extra year that it's sort of off the market. And I think that's a questionable assumption of whether there's real value there for token holders. Can you go to the next one? Cool. So, one of the things we talked about before was how the bond is a signal for an expectation of what's going to happen with the Treasury in the future. So it's a good tool for the DAO to get information about the future state of the Treasury. The bond itself isn't necessarily a signal. Instead, like how the market participates in and interacts with it is what creates the signal. But one of the things that we see is that relationship between price and redemption rate is the signal. But if you have a floor, then you don't get a negative signal. You would only be able to see a positive signal because someone can exit immediately, or there would be a premium. If there's a premium on the price from the floor, then you have a positive signal, but you don't see that negative signal because everyone can just redeem instantly at 70%. Can you go to the next one? Yeah, so that makes it hard basically to determine the parameters of what these bonds should be, because if you have the fast redemptions, 70%, essentially a member balancer is a fast redemption. It's an 8-day bonding period. So you get the signal on the upside, but you don't get the signal on the downside. And the DAO can guess basically what it thinks the market will bear in terms of the bonds, but it has to, if it overshoots, it's paying too much. You could create multiple or have a shortened duration. But either way, it's sort of this guess and check metric to try and understand, what will the market bear. And so there's a fair amount of complexity in trying to release these and get people to understand them, and then actually draw the signal out of them. So one of the questions is there a better way to do this? And so one proposal is if you phase out the instant redemptions and you make all the bonds redeem at 70%, or some other floor percentage with a set duration. Essentially, the spot price that you get basically gives you the rate that is expected for either Treasury growth or Treasury shrinkage over the duration of the inverse bond. And so this gives a lot more information to the DAO, because they can see where the price is above or below your redemption rate and understand that that's what the market will bear as an acceptable price to then bond for time t and get out with what is rationally some kind of return. But this would require liquidity around that redemption price in order to facilitate the price discovery. Can you go to yeah. And then there are a few other things that could be considered with a system like this. The redemption percentage of NAV could be increased excuse me, over time if the DAO was looking to move the NAV redemption rate up to get closer to a point where raising money is possible at 100% of NAV. There would be less variables, less contracts that you'd necessarily need to have. You have sort of one rate, and the market determines. You have one bond, and the market determines essentially what the rate is. And then there are questions about what the monetary policy committee, what control they have over these bonds, right? And then just generally, the member balancer and redemptors we see they're currently working. I know there are questions around the redemptor contract, and I think that's a conversation that needs to happen about, like, what is the question of the member balancer and redemptor, the redemption contract, and these potential bonds that are being worked on right now. How do those work? What needs to be done now? What needs to be done later? And then what are the tools that we could use to better use these bonds to work, like a balancer V2 vault, to allow sort of custody by the inverse bond contract and management of the treasury by governance.
And Ross, so if I'm like it's almost like you almost can combine the inverse bond idea with the floor price guarantee, and right, that's kind of, I think,
yes.
Yeah. And then I guess the question is that like one of those, right? Or is there like a couple different, I think you had a couple different like curves here, or is that dependent on, is it just one linear based on time?
So yeah, so if you had you could have multiple, right? What in order to determine what the curve that the market will bear, what the rate that the market will bear, you sort of have to get. So you would need to put out a contract, and either it gets used or it doesn't get used. It's hard to understand. There's not a whole lot of feedback here to understand what the right rate is. Whereas if you had just one bond and it were always at 70%, the market would basically tell you what it is, what that rate is via the spot price. The spot price would drop or raise depending on what the expectation of treasury growth is. So you can see in this chart here, like, these three lines basically just say, the green one is 90% of NAV pays out, 80% of NAV pays out, and 70% of NAV pays out, starting at t equals 0. If the expectation of the market is that the treasury is going to decrease by this amount over the period of the bond, then it would make sense. The market would accept an 80% bond as like break even. And anything above that would be positive for, like, the market would basically buy those bonds. Anything below that, the market shouldn't buy those bonds. But you need to release them all in order to know. Whereas if you go to the next slide, if you just have one bond, and there's liquidity around the redemption price, people who don't want to take the risk over, let's say, the 1 year to get out at 70%, they would sell now. That would drop the price to a certain amount, in which people would then come in and say, okay, that's a good price for me to get out at 70% in a year. And basically that's the premium or discount on that.
You actually see this now, right? As I was saying before, if you look at some of the redemption balancers, Connors, right? And then I think Molotov is probably going to start doing now, where they're basically saying, I will buy DXD now that's trading at 65, 66%, because I know I can just submit a proposal in 8 days, right? Which is a time I can get the 70%. And yeah, I mean,
to your comment, I'm not implying that this is something that happens immediately. right? Like the member balancers are currently successful, right? So there's no reason to stop the member balancers, but as a
yeah, I guess like an more elegant long-term solution that combines the inverse bond is, I guess so. Where's the other element here? And so I think the goal of this would be to raise the 70%, right? So you're kind of doing that, but putting some time on it. So you have like a nice, so it wouldn't be like 70% in a year. That's not what he's kind of saying. It's like, how do you have whatever that percentage is in a year that like gets you to 70% is one way kind of doing it of combining those. But I guess for me, I think a big thing right now is we're clearly going through, there's a big transition period here, treasury contraction and some of those things, which is not necessarily, I think, the market environment or the type of market environment that we'd want long-term for the token model that can kind of do this. I think this is thinking a little bit past that component. Yeah, again, it's more the inverse. How we think about the inverse bond, which is like the longer term one, less about like the current price floor support.
You could have a 70%, the current period at 70% last for 6 months, last for a year, and then your next bond at 75% of the floor, but it requires a year lockup.
Yeah.
And so the issue is just that if you provide both, then you don't get that signal below 70%. I know Chris and I have had a discussion about like, well, what is the 70%, 75% NAV percentage of the treasury? Like, what does it mean? And really, in the grand scheme of things, it's just a rational expectation of what you can get from the token. So if you promise 70%, it's most likely going to trade at 70%. If you promise 75%, it's most likely going to trade at 75%. Doesn't necessarily mean that 75% is better than 70%. It's a lever that we have to align incentives one way or another. Do we want a higher rate for very specific reasons, like to get closer to 100% so that we can raise funds? Do you want to be at 70% so it benefits longer term DXD holders more? It's not a vanity metric. It's a very explicit, like functional metric to align incentives, and it's important to understand what incentives you want to align.
Yeah, I think going back to this clip art, like I think the key thing is like, how do you make this signal like a bet? And I think that the one that I was like kind of thinking about with Ross, when we were talking about, I think if you look at DXDAO's venture portfolio, I think there's like 7 ones that DXDAO has given investment grants to. NIMI is one, so DXDAO owns 10% of that. And let's say NIMI raises money at $100 million valuation, so now suddenly DXDAO has a $10 million like claim, I guess, in its treasury. And so the monetary policy committee could be like, okay, I'm going to assign that like a 10% liquidity, factor. So that would be $1 million like added to DXDAO's treasury NAV. And that would be a signal that like a DXD holder or a non-DXD holder could basically like make a bet on what they think about NIMI based upon some of that value being unlocked through DXD. And like the really good thing about it is it's like a free option, because you have the ability to exit, right? Because DXD, it's got the backing of all the stablecoins in ETH, so I know that's like confident, and so I can like come in this position and basically make a very single bet on that you want to access that. And others that are like, well, I actually don't think NIMI is worth this much, they can sell their DXD because that they don't think that should contribute to NAV, and that's like a kind of signal there. So I think with like all of this, it's like, how do you get more signal that people are doing. And I think the big signal we're still kind of processing, I think, right, is the signal of DXD holders redeeming at 70%, right? I think that is a strong signal. But then the question is like, well, what are the signals after that? And how do we kind of build that one going forward? Maybe we can go here, I think, Ross.
Yeah, I mean, maybe it's a good time to just sort of open up to comments, discussion, further comments, discussion. People have it, and then these are sort of some open questions about how it could work. Yeah, and again, these are ideas I wasn't a member of the prior discussions, but I've read, I've looked at all the presentations, I've listened to a bunch of calls. I've been gone pretty in depth into it, and so this is sort of my understanding of how these things work, and I'm happy to have a sort of broader discussion about, you know, whether these are good ideas, bad ideas, how this works. Yeah. So if anyone has further comments, happy to talk about them.
Yeah, it's kind of more focused on these like middle two here. As I said, kind of at the beginning, we have a little, you know, we've been doing this and this one over the last month, and I think we have some tools on that. But to me, those aren't necessarily like the long-term tools that allow signal for that. And I think the inverse bonds were kind of the angle for doing that. And so to me, this is kind of like a way of trying to accomplish those middle two of the framework. Any thoughts, questions? I think, you know, when you're calculating NAV is always important in these. So that kind of affects a lot about whether the bond's calculated at the beginning or the end, and the bet that you're making on making that you're making actually have some say.
Yeah, I actually have a question for Soup if you're still here.
Okay.
I think, you know, you asked when Redemptor. I think one of the big questions is here. I sort of wrote it here. What are the what needs to be added to the member balancer, member Redemptor process for it to be an acceptable stopgap? I kind of see the Redemptor contract and this member balancer to be sort of this equivalent thing, where one is maybe a slightly more technical and technically complex version of the other, but they both achieve the same goal. And is there something about one or the other that you think needs to happen in order for that to be an acceptable thing to be effective, while something else is potentially being worked on, or as a, you know, as a final option as well?
I wish we had the like little thought bubble for when someone's typing in this chat. But you know, Jitsi, they'll.
Yeah, and also just to add my 2 cents on this while Soup is typing, I think like we've now seen that the DAO is generally open to fulfilling that member balancer request, but I can still see the maybe hesitation for larger DXD holders. Like it goes against sort of your natural instincts in the space to just send tokens one way, whereas the Redemptor is like, you know, in the same transaction you're getting the funds back. So, you know, I understand that like we've seen that DAO is paying these out now after the first few, but like I can imagine that for some larger holders, like it's still going to be, there's still going to be hesitation and like a sweaty 8 days.
Well, that's what it takes to make, you know, $1 million, couple $1 million
I think it was like 900K, so not 7 figures. But,
Well, I was thinking, yeah. Well, actually, because I was actually doing that calculation, I was like, oh, what would the like work be if you had like lawyers and kind of all these different things? And so I don't know, it's a big thing. And yeah, I mean, like to me, I think, as I said, like, I guess going back to where is it? Yeah, I mean, the DXD was in the process of acquiring back, or is almost right now half of the DXD that was minted from the bonding curve, and has spent. Actually, I can look at this here. This is not USD. But I don't know, like 10, $15 million on this. And so like, to me, that's just a strong signal. And I want to continue to support the minimum price floor and kind of how we can do that in different ways. But like, I think whether it's the member balancers or kind of as the redemptor contract kind of goes forward, I think we're at least on the right path with that. And we don't really need to devote as much time and resources to that. I think Adam says, I don't know how you cancel those. And a single digit DXD holder can, of course, sell on chain without moving the price much.
Yeah, I think having enough liquidity that small holders can not have to go through the whole process is important. But also, wanting a fully trustless or not having to send your DXD to a third party that you're then relying on to vote correctly is not an unreasonable thing to ask. And if there were a trustless model, like a fully trustless model, not just trustless for the DAO, but trustless for the depositor too, I assume that would go a long way towards sort of assuaging many of these concerns, right? That really is what the redemptor contract is, right? I mean, and you could still use right, like the redemptor contract is essentially just using rep voters as your oracle. So the redemptor contract that was discussed has this oracle network, and I know 3AC did a whole bunch of good work on that, and it's basically what rep holders are using as their information to then be a sort of secondary 8-day oracle of real people. So it seems like the one thing that's missing is maybe like an escrow contract or something in which in which the DXD gets deposited into a contract, and then if for some reason something goes wrong, that DXD goes back to the holder. But if the process goes through, then that transaction is made. That seems like the piece that's needed in order for it to be fully trustless. Soup reading the comment.
With that in station. Yeah, I mean, I don't know. I think this is like risk. This is the whole point. You got to be making like, I don't know. I'm thinking of Connor, not that I feel like I follow you on chain enough. So I'm like, some comments about that, but like, I don't know how much profit is going to come off of these second and third redemption balancers. You could look at what like the profit was, but that's just like a profitable trade, and you can do whatever you want on the interest rate between the 8 days. But like, that's a thing that will happen when you have confidence in the ability of the DAO to enforce it. And I think, as I said before, you can see that, yeah, this is Molotov, and I think Molotov is now doing kind of the same thing. Someone sold DXD on Swapper like last night, and then Molotov came in and bought 5 DXD of that, and now he's kind of accumulating it again. So I don't know if he's going to recycle that back, but to me, it seems like the incentives are there to enforce the 70% as long as we kind of keep doing those things. And the only reason I'm saying that the redemptor is like, that's just I mean, it is effort to verify all of these things, but it also takes effort to kind of run that. And you know, I do a lot of things and execute a lot of things around here, and I'm not that familiar with it. So if someone wants to kind of execute on that, that's more than they're more than welcome to. I would say, to Connor's point about the 8 days, I wouldn't be sleeping well if we had all of the DXDAO's treasury that was given allowance to this redemptor contract, because I've got a lot of capital tied up in DXDAO and DXD, and that would be in the same way that DXDAO is taking a big risk on that too.
Yeah, to Soup's point here, I think there's also a distinction that needs to be made between, you know, when we say the 70% floor price guarantee, is that are we saying that the spot price is going to be 70% of NAV, or are we saying that there is the ability to redeem in some way at 70%? Those are, you know, those aren't equivalent. And you could optimize for one or for the other. And like, I'm not sure which one. I would actually say the 70% ability to redeem is more important than the spot price being, you know, consistently at 70%. You know, Chris has said to me multiple times that like a peg is expensive. And essentially, if you're trying to keep your spot price at 70%, then that is a peg that you're going to be paying for.
I did want to talk about one other thing that I'm kind of noticing, and maybe this is a little bit more about how we do these things, like going forward and not just getting started. But so I was looking at so this is the one, as I said, with redemptions here with the redemption. So there's only 26,000 DXD in this version. Let me pull up the other one. And in this one, yeah, so just kind of noticing here, the key thing I notice is looking at the breakdown between stablecoins, ETH, and others, right? And so on this one, we can see the others is 2.93. This is the old version. And then on this one, it shot up to 3.2%. Now, that's not because the others tokens appreciated in price. It's because these redemption balancers are taking stablecoins and ETH out of the treasury. So the more that those happen, the bigger increase of percentage of the others tokens. So that's maybe not like a problem right now, but I could see how that would be an issue in the future. And the way that I think the model would work out, we've talked about this here, is like, well, then the committee and DXL government needs to figure out how to manage the liquidity of that. And so maybe that means you need to sell if you're giving, if stablecoins and ETH are leaving the treasury and you're still committing the same NAV, then that means you should be basically rebalancing away from some of these tokens. Now these already have a 25. Most of these already have a 25%. Well, actually, not all of them. So the WBTC, DPI do not, but the ENS, and I think the big one is Swapper, has the 25% NAV discount, which which I think is maybe a little kind of high, considering right now, if we wanted to rebalance and sell some Swapper for either ETH or stablecoins, I don't think there would be much more than like 5,000, maybe. I don't even know how much dollars of liquidity in that. So I think there's a little bit of a risk in having Swapper there at this high of liquidity percentage. I think we also saw maybe, I don't know if it was actually manipulation, but you could see someone about 2 weeks ago looked to be like maybe trying to pump the Swapper price, because you could see how it'd be cheap to pump the Swapper price so that NAV for your redemption balancer would go up there. So one of the things I think, as suggesting out of this, and I can write this up after this, I think we should lower the Swapper one to 10% of the contribution to NAV. Now that would kind of take a good chunk off of the total value. So I think we'd have to make that decision, but I think that's actually more reflective of what the treasury makeup is in terms of the liquidity component, because I don't think Swapper is liquid at all. All of those were at 20 because ENS is not, I think, meant to be sold, right? I think the ENS was gifted, I guess, gifted to DXDAO as to be a governance element. So I don't think that is, although it is a liquid token, that was not really meant to be part of the treasury like asset there. The GNO similarly, because it was originally actually stake tokens for XDAI. So it was like kind of part of maybe doing that. So I think that's why originally those ones were. Perhaps we could move the GNO one up. I'd be open to considering that. The ENS one is different because there is liquidity, but I think it's more about the that's not necessarily there just for treasury asset value to increase, but it's a way for DXDAO to participate in ENS governance. Yeah, and I think Connor's point here, it just means he says he's not seeing an issue with the 8 days as mechanism. It just means me and Molotov take money from other DXD holders. This is kind of what I think is a really important part of this whole like market creation, that it's not just about like DXDAO doing something and everything being kind of fine. It's about like incentivizing market behavior so that you have these different participants that can kind of learn about these things. So yeah, I mean, I think it's okay that there is a little bit of almost like arbitrage opportunity, so that you can kind of encourage other people to be engaged in the ecosystem there. Soup says Swapper to 10% and ENS to 50%. Yeah, we could talk about this. This is definitely one I'll put in the form after that, because I think that's probably the only like tool we might change in this one. The other things are the protocol owned liquidity, but I think we'll kind of ramp those up, and those are the same conditions that happened before. And yeah, we could think about doing the ENS and the GNO. The other thing I'm thinking about is like, I mean, DPI is still here, so I don't know if we want to sell that, because it's not as large of a one, but the fact that we're selling ETH and DAI means some stronger guarantees from the DAO would mean more arbitrageurs, and arbitrageurs reduce their risk premium. Yeah. I think you could see stronger guarantees, but I think DXDAO was given like a pretty strong guarantee on this, considering there's approvals for 6 million there. So yeah, I think it's all about kind of balancing that component there. And then there was like one other thing. Well, yeah, Molotov asked me about the DMG. Why isn't that counted in it? It's like, I don't think it's worth anything. Wonder what is there any on-chain thing for DMG? Yeah. DMG. It says it's worth 23,000. But yeah, I don't know. Yeah, and like again, I think just reading comments, someone needed money ASAP and excess liquidity, hence bought OTC for a discount. Like I think that's fine. Like that's a good like activity. Someone who is like participant in the ecosystem is like willing to make that 8-day bet, sell it here, and like this is like a pretty common, I think, market operation. And I think having like time element to this is really important. That's why originally it was attracted so much to the bonds there, is because I think you can almost create like a not like a credit market, but I think it's a good way of having different ecosystem stakeholders. And like again, this is like basic finance. Like so many times, is people like duration mismatch. Like people are willing to, I'll take the long bet here because people need liquidity instantly, and that's like a pretty common function of financial institutions and financial players. Cool. Vocal commitments. Ooh, that's scary. Well, that's the other thing about, I don't know if all the people doing the member balancers, of course, you're also earning reputation. So for each successful proposal that is passed, you get, I think, 500 rep. And so kind of that's why yeah, it's 500 rep, but now that's 0.02%. When we first happened, that was like 0.04% or whatever. But again, I think it's a cool thing by increasing the people involved. Yeah, I mean, this is some people do this with the proposals when it's like you can split them up, but then you have the gas costs is somewhat, but we do refund some of that, but not all of that. So there's some kind of component there. Yeah, I would probably start voting those down too, just because they would, clog, although you would have enough gen to boost all of those. I like someone, was it Soup who said we all stalk Connor? He changes his ENS name for just a little psyops. Chudcell, I think. Is that right? Yeah. Anyway, this is okay. We'll do right up on this, and I want to keep having this conversation again. Like, I think we want to be executing on the short term there, and this kind of everything with the redemption balancers, anything with kind of have the redemptor. We didn't think about doing that on Gnosis chain for smaller amounts. We want to have a different one, because I do think there's something there, but hopefully that's through the on-chain, at least the on-chain liquidity. But I think we want to keep executing on the minimum price floor guarantee and figure out how we can continue to do that. And then starting to shift the conversation to like, how do we actually set the right long-term incentives once we get past this transition period? Cool. Well, thanks everyone for joining and coming up a little bit late over that. So yeah, thanks everyone for joining in, and have a good day.
Thank you, Chris. Cheers.
Thanks.
Thanks, Chris and Russ.
Bye, guys.
Oh, yes, Russ. Cheers. Sorry.